Hi, I'm Steve Douglas, Chairman of SMATS Group, and welcome to our 19th annual Market Update Seminar, this year entitled Pinch Me, I Think I'm Dreaming. And there's probably a pretty good reason for that because it's a bit of a strange world. Now, this is the 19th year we've been doing this seminar, and we started way back in 2007 when we thought things were getting a little bit crazy in the stock market and we thought we'd better warn people. In hindsight, 2007 was completely normal compared to what we've now come to in 2025. So we're going to have some fun today looking back at what we said last year and looking forward as to what's going on in the world and how it can impact you as an investor, which is important to keep your sanity in this crazy world that we live in. As always, we have to start with a disclaimer. Just a reminder, these are my personal views. I've well researched them and I'm presenting them to you in how I feel is important, but please don't act on them solely and make sure you get independent advice before you do anything with your circumstances. Now, we talk a lot about accountability in the world, and what we always do with our annual update seminars is we start where we finished off last year. No point me just sitting here and telling you what I think if we don't check if it was correct. And I'm very proud to say that we got it pretty much all right last year. As always, we'll be talking about the four main groups: stock markets, currency, interest rates, and Australian property. And here's what we said last year. We thought that the stock market would have a pretty reasonable year. It had a very good year last year. We thought it would have a very good year again, but not as good. And that's exactly what happened around the world. With the currency, I did suggest that I still hold these views that the Aussie dollar should be between the 70 to 75 cents US dollar mark. And I do think that it should still be there. However, it didn't quite get back to 70 cents. But I don't think I got this wrong because I did say in the seminar, I think this will not happen. So I'm taking that as a correct. I told you where I think it should be. I didn't think it would get there. That to me is a correct. And in regards to interest rates, we expected 2 cuts of 0.25 and the RBA actually did 3 cuts. So I'm taking that one because it's close, and also whenever I get it right on the wrong on the right side, I think that's a win. So I'll take that. And then property, we suggested that Melbourne would start coming back into positive, Perth, Brisbane, and Adelaide would lead the way, and Sydney would have a reasonable year, and that's exactly what happened across Australia. And I'll show you the numbers of that to confirm that later on. But good start to the seminar. We've pretty much got everything correct. Hopefully we can be just as accurate this year as we were last year. So let's get stuck into it. And today it's really more about dealing with the psychological impact of what's going on all around us. Because investment, property, all these things are largely psychological. If we feel good, things do well. If we feel bad, things do badly. So I'm very concerned in this world that things are so crazy that it's hard to understand and protect yourself. So today, please bear with me as I talk about some of the madness and we look about strategies, how you can make sure that it doesn't trigger you into making mistakes, most importantly. And it's all a bit too surreal for me. It feels like this dream. So that's why it's called Pinch Me, I Think I'm Dreaming, because none of this makes sense. Now I've been on this planet working for 40 years, post studies. I've never seen it this crazy. Nothing makes sense anymore. Things that should happen go the other way. The responses of government are inconsistent and unreliable. I don't know what the heck's going on. And I'm not sure if it's actually a dream or in fact if it's a nightmare, because it feels more like a nightmare at times. It's terrible at times. But what we've got is this situation where no one's sure anymore whether it's a reality or illusion. We hear so much information and often it's contradictory. We never know what's real, what's not real, what's true, what's false, what's blatant lie, what's manipulation. So it's really, really hard for all of us to know what's going on. And therefore, how do you make sense of it? Well, the question is, should you even try? I think probably we should stop trying to make sense of it because I think it's getting worse, not better. However, thankfully, we do have degrees of separation. Now, we live in Australia, thankfully. We're investing in Australia as a collective in the main. So we're very much protected to some of the crazy things that are going on, for instance, in the USA, in Israel, in Europe. So we're very, very lucky to be separated enough. And I'm not sure if that's a good thing or a bad thing, and I'm not sure how quickly those degrees of separation will contract either. But what I worry about is this: what is the motivation of these people in charge? Are they genuinely looking after the world? The leader of the free world, Donald Trump, is he looking after everything that's best for us, or is he looking after everything that's best for him? Is he looking at emotional or is he looking at financial? Hard to know indeed. And there seems to be an acceptance of collateral damage. both physical and financial. No one seems to care anymore how many people die on the battlefield in Ukraine, how many people are wiped out on Gaza, how much destruction is caused. That seems to just be acceptable now, which to me is tragic as a society. And the big issue to me is this going to be a short or long-term impact? Now again, depending where you are and what you're feeling, you look at Gaza, that place has been wiped out completely, and the world has sat by and literally let them do it. It's not going to be fixed in 5 minutes. There is 10, 15, 20 years of construction required just to get back to where they were 2-3 years ago. It's tragic. So we've got to look at, is all this going to be a short or long-term impact? Is it just through Donald Trump's presidency, or does it last beyond that as America's reputation? Time will tell. The big issue I see is we're having power shifts now. So the East and the West now seem to be recalibrating. Who is really in charge? I mean, the US was the dominant force. It's starting to wane through confusion, through bad management. Some people love Donald Trump, some people hate him. It doesn't matter in the end. It's what the impact is on the global scale. Now again, we're seeing face acceptance, but we're not seeing necessarily it come to life behind the scenes, and that worries me. Too much talk and not enough action. But this East-West polarisation is a problem. Now, I don't believe, to be honest, that this East-West polarisation needs to be there. One is jostling for position and the other is responding to it. So both of them need to just calm down, not care about who is the boss, and realise that we're all sharing one planet, one human, the whole deal. We don't need one dominant force on this planet, not if we do it sensibly. And of course, the US, we're seeing Donald, again, whether you love him or hate him, is irrelevant. We're seeing him make decisions on the fly that usually and legally are requiring Congress approval, Senate approval. Now, the fact that he's not seeking that is bad enough. The big problem for me is the fact that the Congress and the Senate aren't being able to hold him to account, or are unwilling to hold him to account. There is no point having laws in the world if they're not done. Now, ironically, Donald Trump went to the United Nations and appropriately called them out for doing absolutely nothing in the world, not stopping wars, not helping him stop wars. And he was 100% correct in that. And I've been saying that for a number of years. But at the same time, it's a bit hypocritical because he's doing the same thing in country. Now again, if you're a Trump lover, you'd be thinking, oh my God, he's doing a wonderful job. If you're a Trump hater, oh my God, he's doing a terrible job. How is it that we can look at the same thing completely different? That's confusing to me. And of course, what we've got this situation is the community first or is the person first? And that really is where I think society is starting to go very wrong. We're too focused on the individual getting away, getting a benefit, rather than the community being the primary benefactor of all decisions. We need to come back to that as quickly as we can. And of course, this short or long-term effect, as I mentioned, are we going to look at this as 3 more years of the Donald Trump presidency? Or is this going to be America is now tarred forever? Good or bad? Time will tell. But I worry about these decisions having far longer impact than most people truly understand. And the big issue we have now is this power of perception. Like I say, some people look at Donald as a wonderful person. Some people look at him as an evil person. There's the same person, the same actions, everything, but the perception is completely different. And that's unusual. I don't think I've ever seen such polarisation on this and other matters at any time consecutively in multiple countries at the same time, affecting people in the same way, which is tragic for me. But the big issue to me is not just the power of perception, but the big problem is the power to alter perception. Using video, using social media, using words, getting away with things, Congress not stepping in. All these things are tools to make people think different ways. And again, we never know who's driving those tools. We never know the purpose of those tools. And that's scary in its own sense. And this is why, to me, it's more a bit of a nightmare than a dream at the moment. But we have to be aware of this environment in order to protect ourselves throughout. What is happening in the main, though, is that we're now going into this mental immunity phase where we're literally just sticking our head in the sand and hoping it all goes away. We do that for a number of reasons. It's all a bit too confusing. Even myself telling you about this, I don't know all the right answers because no one's getting copied in on all the motivations, all the reasons, all the vested interest. Nobody. And so it's all too confusing to understand. Is it right? Is it wrong? Should you or shouldn't you? It's an issue. And it's all thankfully too far away for most of us, particularly in Australia where we're isolated and protected and we've got this wonderful little island. But things can change pretty quickly, so we shouldn't be sinking our head in the sand. We should be thinking about what is the impact for us personally, as a country, as a society, and as a global community of citizens. And at the end of the day, we're all on this one big beautiful planet together. We should be thinking like that. We shouldn't be having or allowing wars to occur at this day and age when we're smarter than that. And of course, sadly, it's all too regular. Even if you're massively in objection to Putin invading Ukraine and now being there for 3 years, that's nothing compared to the US invading Iraq and staying there for 20 years. So theoretically, Putin's got another 17 years before he even catches up to America. Now again, we shouldn't be allowing the US, Russia, or anyone else to do things like that. But we are doing it because it's just normal now. And we see Israel invading Gaza, normal. We see that the US now shooting boats off of Venezuela, normal. Why are we allowing this to happen as a society, collectively, individually, country to country? It should not occur. Individuals are making decisions that are far, far more impactful on the communities, and communities are letting them get away with it. And of course, it seems all too hard to change. We saw just recently there was a No Kings protest in America with 7 million people. It didn't even move the Richter scale, didn't change Donald Trump's opinion. I don't think he even realised that. He probably thought they were celebrating him, not anybody else, not protesting. And this is the crazy thing. We're not being able to make that impact strong enough. And if you do these days, if you come and protest against the establishment, you're branded, you're chastised, and potentially you're even arrested. Even if you're on the right side of society, they don't seem to care, which is sad to me. And no wonder why people are putting their head in the sand. In terms of how do we get out of this? Well, we have to be led out of this by quality leadership. And you can see in my heading, we probably have a lack of leadership. Where is the accountability? Where is the responsibility to do the right thing? Things are getting so out of whack, again, against constitutional rules in the US, against United Nations laws, and nothing gets done about it. No one is brought to account. No one is held responsible. It's just not right. And again, we've got this government spending going nuts. Now, half of the problem I think here is we went from million to billion literally overnight, and the governments are now saying, oh look, we're only spending 0.6 billion, 0.1 billion, 2.3 billion, and everybody thinks that's not a big number, but a billion is 1,000 million. And the scary thing is we're moving from billion to trillion, and trillion is 1,000 billions. So that's unbelievably scary because for some reason no one seems to say, hey, is that how much it costs to build a road? Hey, is that how much it costs to buy something? No one is doing anything, so we've got no sense of accountability, calculator accountability in government, no sense of sense when they can get it done cheaply in their house, but it's 3, 4, 5 times the price just because it's for the government. When we've got too many people doing things that don't need doing, getting paid salaries that you can't get in the private sector. All of this has changed in the last 3, 5, 10 years to make it a strange environment where no one seems to be saying, hey, don't be doing that. We saw in Australia, for example, the government spending was about $450 billion a year pre-COVID. When COVID came, it increased to 650, 700 because there was emergency spending, hundreds of billions of dollars to protect everybody during COVID. COVID went away, but the spending stayed. We didn't go back to the 450 billion levels. We're now up at 750 to 800 billion in spending. How is that possible? There is no answer. But the spending is going crazier and crazier, and they have the audacity to say that it's not enough money coming in. So they're saying they want more tax, they want more debt. The US government is currently in a shutdown, the longest ever at the moment, because they want to lift their spending and debt levels up to now $38 trillion in debt. It's gone up over $30 trillion in the last 20, 25 years, which is scary. But no one seems to be having that conversation. No one seems to care, and they keep borrowing and borrowing more and more. Now again, they wouldn't have to have the shutdown if they had a balanced budget, i.e. they didn't need to borrow anymore because they would just be spending what was coming in. But it's only because they need to increase the debt ceiling that they have now issues passing legislation. And whether you blame the Democrats or the Republicans, you read one side or other, they both blame each other. It's irrelevant. The only reason they're even at stalemate is because they are going further into debt. They are losing money. The simple solution, stop losing money. I think Warren Buffett once said that it's easier to stop the deficit. All you have to do is pass a law saying that any member of Congress or senator, if the budget is in deficit, loses his seat instantly. And then you'd never have another deficit. And I agree with him 100%. What we've got here is that everybody else is to blame. And Donald is particularly good at this. Everyone else is to blame. Not him, never made a mistake, always the best ever. He was the fault. And now he's pursuing them with legal things. Again, this is not the way to run good governance, good society, good thing, because that's what our kids are seeing. Now they're going to emulate that sort of behaviour, which is tragic in my word. We need to build character, resilience, integrity. Instead we're building cheatsome, defiance. We're building dishonesty. This is not the principles of a good society, and we need to alter this in a hurry. And of course, no one is accepting any fault, and it's just an issue that couldn't go wrong. Even if it messes up blatantly there, not me. I mean, even Donald just doing his ballroom at the White House was definitely never going to knock down the East Wing, wasn't even going to touch it. The East Wing bulldozed completely. And nothing is being done about that. Hundreds of years of history, prime nation-building character gone on a whim. Doesn't make sense to me. And the problem is nobody seems right. No one seems to know the solutions. But the problem is they're there. They're just not implementing. They don't suit. I.e., if you look at Gaza, simple solution, stop bombing civilian targets, regardless of how deep Hamas is underneath. Stop taking them out. Okay, might not be the right answer, but it's the right decision. Okay, stop doing that, find out what's going on, pinpoint your stuff. But they've bulldozed an entire community. That can't be right. And we'll look back, I think, with great sadness at how we've allowed these things to happen in this particular chapter of humanity. And the thing is, what do? Do you just keep sleeping till it's all over? That might be the best solution, to be honest. And by that, what I mean is ignore the noise. You're going to keep getting confused. You're going to keep getting mixed messages. You're going to keep having problems, thrust at you on your TV set. Maybe just blank out of them. That's all you can do. So to me, I think, maybe sleeping it through is the right path to take. Now again, I'm not telling you this to be silly. I'm telling you this to be aware. You have to understand that it's probably right to be confused. It's right to be scared. It's right to be nervous. But don't let it impact your personal long-term decision making, because if you do, you're putting your finances at risks. If you stay calm, stay focused, as we'll talk about later, then you keep yourself protected. At the end of the day, you need to protect yourself. Okay? Now, the big issue we have in the world is that things that aren't real become real because of us. Things that shouldn't happen, they become real when we make them real. And if enough people believe, it's true. So you've got to make sure that we start getting back to interpretation of facts rather than just collective opinion acceptance. And this is what we need to do, because it's getting worse and worse and worse. So stay in your safe bubble. Understand noise is coming and it's getting louder and louder and louder, but don't fall into the trap of following it down that little rabbit hole. If we have a look at the big world issues, and we're going to start with the stock markets as we always do, the stock markets are definitely reacting to the Donald Trump presidency, because he is tweeting every now and again saying, hey, I think this, I think that, and again, it's terrible that I think that the White House, the President of the United States, the leader of the supposed free world, can run his office on the back of women fancy tweets rather than official considered press releases or statements. I think that's one of the most terrible aspects of the current world. No one gets it always right when they tweet. It's one of the reasons I don't use Twitter. I think it's dangerous, so I refuse to use it. But everybody seems to be following those tweets, and that is creating a lot of problem all over the world. Now, if you look what's happening is those tweets are creating significant movement, or is it manipulation? Well, I think probably the latter. And this is the thing, we're now in a market of manipulation rather than movement. We don't have bull and bear, we have bull S. So it's, I don't know, it's a strange old world where things can happen because of someone saying maybe this, maybe that. Especially when you consider that a lot of the reactions are to things that haven't happened but have been said and often never come to pass. Even the tariffs, etc. They're not technically legal in the US, but people are reacting to every time Donald does one or doesn't. We're also seeing a situation where valuations for companies has gone nuts. Microsoft, which is one of my beautiful favourite companies, we need Microsoft in the world. I couldn't be doing this lovely PowerPoint presentation without it. Thank you, Microsoft. But it's now worth almost $4 trillion. And if you know anything about stock valuation, anything about company valuations, it works on a thing called multiple of earnings, price to earnings ratio. And these price to earnings ratios are now really, really out of whack. They're 40, 50, 60, which means 40, 50, 60 years of profit to justify the current traded value of the company. That's just not right. But the thing is, it's there. It doesn't matter what I think. The stock market's saying, hey, we're okay with that. Let's keep going. Part of the reason for that is because I think AI is a driving force in the recommended value. And if you look at any AI company right now, it is definitely artificially valued. Why? A lot of the trading houses use AI to decide what they're going to trade. And what do you think an AI is going to recommend? Any company using AI. But it's a worrisome to me that AI is there at all levels. Now, at SMATS, we run on what's called HI, human intelligence. We've had 30 years perfecting it. We work really hard to ensure it's accurate because that still is the most important. Even with all the AI in the world, you still need to make sure it's correct because it's getting its information from the other information out there, and there's no guarantee that source was correct. Just like if one of your friends told you a rumor about another friend of yours and you react, you might get it totally wrong and find out that your friend told you a bunch of nonsense. You need to find out the truth source. You need to be able to understand, would it be accurate? It's critical. Human intelligence is still the most powerful. We've also got way too much cash, and everyone forgets that every day all around the world, every payroll has these days superannuation or pensions, people putting money aside for their futures, and that money sits somewhere and has to be invested. Yet there's no more Microsoft shares, there's no more BHP shares. They're all the same, so that there's more capital competing for the same amount of shares. That's going to create an artificial uplift, which makes things more dangerous. Again, hence why you better be damn sure where your money is, how it's doing, because this push can also create even more manipulation. So we circle back and there it goes. There's way too much money available to be moved backwards and forwards. So you need to be very careful because the people with this money, with the power over the money, with the power over your money, you need to make sure they have integrity and will not sell you down the river just to make a couple of coins for themselves. And that's a big issue. So I think we're not so much in a new age of AI, I think we're in a new age of confusion. Because no one quite knows what they're paying for, where their money is. The vast majority is out there in the hands of others, and that can be very, very troublesome if you don't have a level of security and trust. In terms of the stock market, this is the last 12 months, and you can see year on year, 12%. So it was a good year overall, despite the fact that we had a 15% drop, thanks to Donald Trump bringing his tariffs and tweeting about them. But the thing is, we had a 15% corresponding lift. And this is where a lot of people say, hey Steve, is the next stock market crash coming? I personally do not believe we will see another big stock market crash. I don't think we will. And the reason for that is I think we're seeing, as I've said for the last few years, mini crashes. And you can see here, just on this thing, I've charted 4 or 5 mini crashes, and a mini crash is up and down more than 5%. Down to buy, up to sell. The stock market power, the people that have all the money behind the scenes, can do these mini crashes and take 4, 5, 6, 7, 8, 9, 10% at will. They don't need to do a 30, 40% crash and then wait for recovery. The other thing that we're seeing is when there is a crash, such as Donald's tariffs, such as these mini crashes, the bounce back is very, very quick. And the reason is, I keep reminding people, you can't make money if the stock market goes down. You can only make it if it goes up. So they have to push it down to buy cheap, push it up to sell, make that profit, and then they're another billionaire overnight. And that's yours and my money that they're doing, taking a little bit. Now, as long as they give us our crumbs, we're fine. And again, if you have a look at the companies we put up every year, you can see there's BHP. It made a 2.6% increase in its share value. That's not very much, but it made a $9 billion profit. Now that $9 billion profit was up from the previous 7.9, so you would have thought they might have got a little bit more growth than 2.6, but that was enough. But look at HSBC. HSBC Bank in the US, and the US is supposedly in a bad, strange, confused economy. Its stock price went up 52% this year, on top of 18 last year, 19, 18, 18. Look at the growth that company has had. It is unbelievable. Yet its profit, is $24 billion. Now again, you look at, say, Bank of America, 27% growth, 27 billion profit. But if you look at, say, CBA in Australia, it went up 16%. Its profit only went up 0.7 billion. Oh, only 0.7 billion. How much is that? $700 million. But you look at Microsoft, it went up 22%. Its third consecutive 20% gain year, but it made $100 billion of profit. Now, $100 billion doesn't justify a $4 trillion valuation, but somehow on the stock market, it does. And it's traded every day at that. In fact, they say it's cheap at the moment. It's around about $500 a share. Everyone's telling me, oh, it's 700. Yes. Of course they have to tell you 700 because you wouldn't buy it if you didn't think it was going to make you money. That's the big issue. But this is the thing as a society, why aren't we asking these companies, how did you make so much money? And these numbers are after tax. So billions and billions and billions are going into these companies at the expense of society. Society is providing the profit either through taxes and the government paying for the products, or through our subscription to Microsoft. As a society, we're saying it's acceptable for them to make 100 billion. Again, I can't question that because everybody else seems to say that's okay. So, but if you have a look at overall, this is where we got it right. The Dow Jones went up 12% year on year. The Australian All Ordinaries went up 10.8, and we had the FTSE 12.2. Now again, that market in England is supposedly very, very soft. They've lost a couple of ministers, all sorts of confusion, a lot of problems there with refugee status, all these things going wrong, yet their stock market is still performing nicely. In America, we've had Donald Trump, rightly or wrongly, tweets, madness, manipulation, stock market went up. And what it shows you is the overall power and stability of the market is now probably well proven. We don't need to see a major crash if we have mini crashes. And that's where I think it's going to continue. So prediction number one for the stock market is that I think it's going to have a reasonable year. I don't know if it'll do double digit. It's going to be highly volatile, but it'll end up positive. I'm not convinced it'll be double digit, but it wouldn't surprise me if it did. So that's prediction number one. But what I will want to point out, as I usually do, is the stock market is certainly the real and most common form of investment. But have a look at Bitcoin. Geez, you shouldn't have bothered buying HSB shares at 52%. You could have bought Bitcoin and gone up 95%. 95%. What did it do last year? 95% as well. So it's doubled last year and it doubled again. Why? Very simply, there is now 820 million people that believe in Bitcoin, have crypto wallets and trade it. That's up from a staggering 617. How many the year before? 450. So it's gone from 450 to 600 to 800 in just 2 years. Now, this massive people that all believe in the same thing comes back to what I was saying earlier. They make it real. Now, again, I've been telling everybody for years, Bitcoin is officially worth nothing, and I will never change my mind. There is no asset behind it. There's not even a person behind it. It's worth nothing. But it's worth everything if enough people believe, and 800 million people believe in that stuff enough to give it a valuation of $2 trillion. So if you had trillions, you could either have one Microsoft or two Bitcoins. Now, if Bitcoin is worth nothing and society has given it a $2 trillion valuation, as I keep reminding people, How much is anything worth if Bitcoin, nothing is worth 2 trillion? So Microsoft looks like a screaming bargain at 4 trillion compared to Bitcoin that does nothing at 2. Now again, more and more people will come, and why? Because it went up 95%. It's a self-fulfilling prophecy. Hey, don't miss out, it's gone up 95%. But as I remind you every single year, the problem is as soon as the prospect of growth disappears, as soon as the opportunity of profit is gone, and then the smell of loss starts to waft into the room, these people are only there believing because they think they're being led to the promised land and will have fortune. What if they can't make fortune and they start making losses? And we saw that with Trump coin. First day, it went up heaps. Then it collapsed. Everyone who bought lost money except for a handful at the start. I'm not sure who that was. Go check it out yourself. But these are the things. Once you lose belief, you lose momentum. And we've seen this in Bitcoin time and time again. In fact, the reason why it's gone up so much is 2 years ago, Bitcoin was worth about 20,000 US. Now it's 100,000 US plus. But it had peaked before the 20 up at about 80. So you can see the capacity to lose that faith is very fast. Now you can imagine if it loses faith when there's a few people, that's nothing compared to when it loses faith when there's a heap more people in the room. When someone yells fire in a theatre, it's hard to get out the door. So good luck to all those people. I'm not going to knock it because they're real, they believe in it. But what I am going to say to you is never underestimate the fact that it does not have any underneath value. So you are playing with sentiment only. And that's important to remember for your own protection. So that's stock markets. And we look at the dollar. The Aussie dollar, when we started last year, wasn't far off 70 cents. And again, I hold my value at 70 to 75. But you can see it dipped all the way down to sub 60. And then during the tariff war there, bang, it went even lower. Because Australia is an export country. So you can see it had recovered up to 67 cents. And then it's fallen back down to 65. Now that's amazing when you consider how strong and powerful the US is. Well, hold on. As I'm recording this, they're still in shutdown. So they're a complete mess. They can't even pay their bills. How is it possible that a currency can be strengthening at a time when the country is in crisis, when the government is in lockdown, when there's confusion and resistance everywhere? Yet somehow markets say, we love America more than Australia. It doesn't make sense. But that's the world we live in. And true to the point of that is the dollar is going to places it shouldn't be. Now I'm going to do my next prediction on the currency. I think the Aussie dollar should be 70 to 75 cents. I'm not changing my views. That's where I believe true fair value is. But just like last year, I'm going to say, but I think I'll be wrong next year. I do genuinely expect the dollar to be above 70 cents. So right now I feel it is bargain, but I'm not in charge. You'll have to take that opinion for yourself. But I'm going to hold my prediction of 70 to 75 cents, asterisk, I think I'll be wrong on this one. Not because I'm wrong, but I think the market's got it wrong. I think there's some weird stuff going on there. So take advantage if you feel its value. If you want to buy quality Australian assets and you have foreign currency, take advantage now. The pound is even worse, and so too Singapore, where our headquarters is, same deal. Most of my life, the Aussie dollar has been worth more than $1 Sing. It's currently 80 odd cents. Bargain. Not sure why. Australia has all the resources, fantastic country. Singapore's a wonderful country, but has no resources. It only has money. That's its only resource. So that's an interesting one. So prediction of the currency, 70, 75 cents, asterisk, I think I'll be wrong again. See how it goes. In terms of interest rates, you can see we've had those 3 rate cuts, 0.25% each. I did predict 2, so again, technically got it wrong, but again, wrong on the right side is a good thing. But we can see the rest of the world has been dropping them a bit more aggressively, particularly in Europe and less so in America, where again, Donald Trump's style has been to smash the Reserve Bank chairman there, saying what he calls them too slow. Too slow is his nickname. Imagine that. How disrespectful. The president is lambasting people and throwing nicknames on them. That's absolutely outrageous in a normal society, but not in a Trump society. Totally fine. What we've got here is that the official cash rate is now 3.6. And people say, oh, is that too high? No, it's not, because the only time it's technically been lower than right now was when we had crisis of either the GFC or COVID, for goodness sake. So if you want it lower than today, which crisis would you like to have? Another pandemic, a global economic meltdown? Maybe let's have none of those. We've had enough. Let's just be happy that it's 3.6. Now there is probably room to go back down a little bit, because the key point for the Reserve Bank is to say, hey, we want inflation back in range. And they call their range 2 to 3%. So we're back in range, so theoretically we can have another rate cut. But this is again where I think the whole world is being tricked and manipulated and false stories. Inflation got super high during COVID because supply chain, etc., went all out of whack. So it went up 6, 7, 8, 9%. Now theoretically, if you've just had it because of an interruptive event such as COVID, on the other side of that event, prices should go back towards normal, which would theoretically mean deflation. It should mean for at least a year or two, you should see negative price growth, -2, -3. Not in the modern world. What they did is they locked in that 9% rise, and then they trained us through words to say, aren't you lucky that it's not rising by 9%, it's now only rising by 3 again. But what happened to the adjustment? So everybody's got that kick in. Now in Australia, if you're on a pension or an employment benefit, you're super happy about that because those pensions are linked to inflation. So everybody got a big pay rise if you're on social services. But as a society, I think we got duped. So that's just how it goes. And of course what we've got there is the main issue that we're not seeing rates go down quicker in Australia or further is because the Reserve Bank, rightly so, is genuinely concerned about the amount of spending the government is doing. And it's distorting labour markets, it's distorting the economy because the government's doing really well, largely thanks to migration, higher tax revenues, personal tax revenues. But it's spending it just as fast and still in deficits, despite the fact it's got record high revenues. And they have the audacity to say, well, where can we get more taxes from? Because we want to spend even more. No, trim it back, get efficient. That's all they need to do. If they do that, maybe we could see some rate cuts. Now, I'm going to go on prediction. I don't think we will see too many cuts because we're already at the low end of the range without a crisis. So I'm going to say we'll have 1, maybe 2 more rate cuts over the next 12 months if the government can listen to the Reserve Bank and try to pull its head in on spending. The likelihood of that, all but 0. So prediction on interest rates, 1 to 2 cuts, likely to stay in this range. Let's go to property. And again, with property, I always start with migration because that still is and will always be the primary driver of property price growth. Anywhere in the world, if you want to see property growth, you need population growth. And not just population quantum, affluence. You need affluent population growth. And that's what Australia has. And you can see here with all the numbers, we're now at 27.4 million in December 24, which means we're tapping on the door of 28 million right now in Australia. We're very, very close. Now you can see here, we're back at our pre-COVID levels of about 1.7% growth. After last year, we peaked up at about 2.5. Now that peak up was literally just sucking up all of the COVID exits that came back. That was largely the students in Victoria that had left the country, were studying online and were told they had to come back and finish their degrees in situ, in country. So that came back. But you can see Victoria, which has been languishing the last 2 years, the last 3 years, their quantum population growth is back at normal levels, where in 21 it went into minus growth. Now that has caused confusion in the property market on top of higher taxes as a property investor in Victoria, higher regulation as a landlord. So all of these 3 things combined to create a lot of negative energy, a lot of negative sentiment, and Victoria has been in negative growth up until recently as we predicted. But it has the highest quantum population growth in the country, which means it has the highest amount of underlying fundamental momentum. If you look at WA, it's the highest percentage at 2.4, 70,000, 1,200, 1,300 a week, 1,400 a week coming into WA, but we've got the highest wage average in Australia. We've got the lowest, one of the lowest, property prices. So that market is going to feel the pinch and have a lot of upward pressure on it more than any. But everywhere is pretty consistent. 1.3 in Victoria, in New South Wales, 1.9 Victoria, 1.9 Queensland. A lot of downsizer activity with money coming to Queensland, looking for the rest of their life enjoyment. Hence Sunshine Coast, Gold Coast, these places are doing phenomenally well because a lot of downsizers out of Sydney and Melbourne are coming up there, baby boomers, releasing equity out of their homes, buying their dream home, having their best life. The other thing is Australia is just a great place to live, and we put this up every year and we haven't moved too much. Now Sydney moved from 7 to 6. Melbourne is still at 4, but it used to be the number 1. And you got Brisbane and Perth rounding it out at 16 and 15. So our 5 major cities in Australia are in the top 16 in the world. Now this is incredible advertising, this is incredible factual. This is why people would love to live in Australia. And of course we don't really have winter in Australia. Everywhere else there's lots of snow. Not in Australia, we still have lovely days in winter, particularly in Perth. So this is why people are coming. And if you have a look at, these are the drivers, right? Right now we've got a big surge in the market in the sub $1.5 million spending level because first home buyers are being heavily supported by the government through a 5% deposit scheme. If you're a first home buyer, it's a 5% deposit only, for you to buy your house. Now the government, does protect everybody, because you do have insurance if you borrow 5%. You have mortgage insurance that covers up to 15% more equity, that if anything goes wrong, the insurance pays out the bank. But what's happening is the government has had that program for a number of years, but there wasn't a huge amount of take up because it had caps of income and caps of spending. And those caps were genuinely unrealistic. So if you were on a decent wage looking to buy a decent property, you just didn't qualify under that first home buyer scheme. But just recently they took those caps off. So it's now unlimited income and more realistic spending. So this is now stirring the market up far greater. And if you go online at the moment, which is beginning of November 25, and look online, realestate.com, domain.com, and say, hey, look, that's a nice property. What you'll see on everyone almost is under offer, if it is 1.5 or less. The market is very hot in that sector, but the unintended consequence here is those people are usually buying, landlords exiting. So we're losing rental stock, but we may be losing a renter, but we're putting more pressure on the market, not less. In my mind, the government should have made this only for brand new purchases, off-plan, house. If they did that, every new first home buyer would be buying another brand new house, which would be increasing the stock, not putting pressure on the established market. So this to me is a good thing if you're a first home buyer. It's a terrible thing for the market overall, but it's completely wonderful if you're a property investor, because a tightness of supply, a tightness of the rental pool means an investor is going to see prices rise, rents rise, which is awesome. At the same time, that scarcity is getting bigger and bigger and bigger. And one of the things a lot of people forget in Australia is that the time to move from concept, acquisition to delivery on any decent sized project, whether it be 10 properties or a 300 unit high rise, is years. It's years. It could take 7 to 15 years sometimes to go from concept, acquisition, build, and then delivery. And what that means is it doesn't matter what we build, we're never keeping pace with that demand from the natural population, coming out from youth to adults, from the migration and from the downsizers, and all of the elements of our market. We cannot keep pace, supply and demand. Demand has always outstripped supply in the 30 years that we've been doing this. I don't think that's going to change in the next 30 years either. So this is again going to keep putting upward pressure on prices, upward pressure on rents. Ideal time to be an investor. Sadly, at the moment, the migration is getting the blame for this. It's like, stop migration, they're pushing prices up, and that simply is not true. Of course, having migration is going to put pressure on the housing market because they need somewhere to live too. But if we didn't have migration, we wouldn't have the tax revenue in Canberra. If we didn't have migration, we wouldn't have the activity in the economy that keeps it out of recession. So this is not just a singular thing you can look at. You can't just say, oh, migrants coming in taking houses. They're not in the main. They're buying houses, they're building houses, they're fueling the market, and they're stimulating the economy. The one thing I keep reminding people is we're having last year 1.7% population growth, but we only had 0.2, 0.3% retail growth. So if we didn't have that migration with more customers, we wouldn't be able to sustain our economy in positive. So we'd be going backwards, which would create even more problems. So migration is not the blame, it's the solution. We need to bring in more people that'll do the work on site, more builders, more carpenters, more tradespeople. Get people in that can build the houses, then they can all live in the more houses that are available. And of course, the biggest driver is the fact that we're now going into a highly affluent community. Now that's largely fueled by downsizers selling their previous homes, empty nesters, downsizers, whatever you want to call them, realising their gains justifiably tax-free, and then going and finding their next home, their retirement lifestyle, whatever it is, but they're freeing up the home where they were, moving into a smaller but maybe similar expense house down the line. But this is not going to change. This is a pivot moment in our society where we've been working hard to save money, we've got justifiable gains that we're going to realise and go live a lovely life in retirement, which is what should happen. But again, people have to understand that's not a bad thing, it's a good thing, but we need to be prepared in advance. We want to have someone buying off the plan, bringing the next property into line so that when they sell their single home, maybe we can replace it with 5, 10, 15 or 50 on their block of land. So infill, all these things are big issues that need to be done. And that's where the government is missing the mark. As I mentioned, they should be using the first home buyers solely on the unlimited caps on brand new property. But state governments should also be releasing more and more for issues like land release, lowering costs, speeding up approvals. All these factors are critical but are not happening. And we've got the issue where now it's so expensive to buy a property with the on-cost, land tax, stamp duty and GST. GST is embedded in every brand new property. Now, if you think about it, the only way to fix a housing crisis is to provide more houses. Now, GST should not be in houses. You think about it, GST is 10%. Houses are now $600, $800, million, $2 million to build. Why are we charging 10% on that? Especially when you consider that the money goes to the states, who also collect, when you buy a property, brand new or not, 5% stamp duty, etc. Now, in my submission to the Housing Senate Committee on Affordability, I said, hey, we shouldn't charge GST and stamp duty on anything brand new. It should be one or the other, or hopefully neither. Now, thankfully, Queensland has just said, hey, if you buy brand new, we won't charge you stamp duty. Adelaide, South Australia is also doing the same. These are essential things that should be changed across the board to make it affordable. Now, it may not mean that housing prices come down, because likely if they do remove stamp duty, it'll just mean that profits for developers will go up. Now, you might think, oh, that's terrible, that's not fair. No, it's actually a good thing, because if we make it profitable, because trust me, developers are not making as much profit as they should for the risk they're taking, then what that means is more projects will go from idea to delivery. Right now we're seeing many projects that cannot get the funding, cannot get the confidence of the developers to build because they're not profitable enough. If that GST was taken out and they could hold the same price, there's 5-6% in every new build roughly for GST. That 5-6% can go to the developer to encourage them to build better quality, better style, and more of them more often. And that's the critical element. So these things should happen. One of the things that we've done, if you're living overseas, we've now got a polis set up to help lobby against some of these things, because there's foreign taxes on top of those duties. We need a voice for people overseas and also people in Australia that are being sick and tired of being charged too much land tax, too much GST, too much stamp duty. We need to get a voice to say, stop this. Please go to apola.org and have a look at that. If you're overseas owning a property, join us to help us positively encourage the government to fix some of the big problems. Read my submission to the Housing Committee and see if you agree with it and get on board. In terms of where the market is, I still think everybody is in the period of opportunity, because we've got bad policy of government, we've got lack of supply, and we've got high population growth and affluence in the community. All of those things combine to make everywhere worth investing. Ironically, it's the best time to be an investor, it's the worst time to be a landlord, so you've got to be mindful of that, but it's worth the pain. Please have a look, consider investing. If we have a look at the overall numbers, there's the June quarter. Everywhere was in positive except for Hobart, but even Melbourne is back in positive territory. Now, Melbourne has been in negative growth for the last 2 years. As we predicted last year, we said it would return to positive, and it did, albeit for the tune of 1%. So it's been the worst property market in Australia for the last 2 or 3 years. Hence, on the 5-year average, it's only done 1.4 over the last 5 years. But what everyone forgets is just recently, Perth was only doing 1.42% growth over the last 5 years, but it's had a growth spurt, and now over the last 5 years on average has done 10.3. Not because it did 10.3 every year, it did hardly anything, lots. Brisbane did the same, hardly anything, lots. To bring in 11.9, highest in the country, equal with Adelaide, performance, average over the last 5 years. I think Melbourne was most likely to do that next, because that's traditionally how all Australian markets work. Slow, medium and fast cycles, as we just put up before. So I'm thinking Melbourne is probably one of the best opportunities as they wake up out of their miserable sentiment. But everywhere in Australia is looking good because the fundamentals are so strong. Now again, if you look at the average, point to average, for the last few years we've been begging people to buy in Perth, not because I love the place and I live there, but it was minus 48% to the average value in the country. And we said that was not sustainable. That has to get a smaller discount to average. And that is exactly what's happened. It's moved from 48 to minus 26. Now that's important because at the same time, the national average has gone up. So not only have we gone up in that national average, and small in discount too, that's a double benefit to WA. And hence why it's been one of the best markets to invest in. Ironically, you see on that list, apart from Darwin and Hobart, Perth is still the cheapest major city in Australia. So it's still got a lot of capacity to grow because it's still got the highest population growth percentage and it's the highest weekly average earnings in the country. So I'm really bullish on Perth, I'm really bullish still on Brisbane, I'm really bullish on Melbourne, and I'm really positive on Sydney too because it's the biggest city and there's no decent supply in that town. So all around Australia, I think you can invest with confidence and without fear. And again, the other reason I believe that is if you look at the rentals, the vacancy is still well below traditional levels. National vacancy on average usually sits about 3%, sitting at 1.8, and everybody is under 3%. Now Perth had a big uptick. It went from 0.5% vacancy to 2.7. A lot of that is because some stock came in the market. People have given up, starting to share houses or go back and live with their parents, save for a deposit. But that will be temporary because we have the highest percentage population growth in the country. So that vacancy will be sucked up very, very fast. Melbourne is coming back in a normal. It has been at 4.5, now back at 2.5, and I think will continue to decline. So this is telling me that we've got very stable long-term benefit. And you see what that translates to is good rental increases. Now the only place we haven't had rental increase is Melbourne because of the fact that it has had a high vacancy, but that vacancy is now contracting. So the next logical kick is to move to rental rise. You can't get too much rent growth if the vacancy is too high, but that's now contracting. So overall, it's looking very, very positive for the property market. So my prediction for the property market is I think everywhere is going to have a good year. If you look at the national long-term average, it's about 7%. I think everybody's going to be above the national 7% long-term trend rate. And the underlying pressure is not going to relieve itself any time soon. So I think we've got an investment window of 3, 4, 5, 6 years, unless you see a flood of new construction, and the chance of that, almost zero. So keep going, keep investing, push through. And you can see here, here's those numbers. You can see the residential approvals isn't enough. Now the government is trying to get 120,000 homes a year built. They've got no chance of achieving that in my mind. But you can see housing loans aren't increasing too much at the moment. They've a bit of flat line there, which is interesting because we're having higher prices but same amount of debt, which means people are either borrowing less and having more equity or not borrowing at all. And then the wealth again is flatlining in Australia. So that's saying to me that people are enjoying their money, spending it, even though their wealth in their housing, their wealth in the stock market has gone up. By the fact that we can see here that the wealth is fairly flat, if prices have gone up in property and values have gone up in the stock market, yet my wealth is the same, that means I'm enjoying myself. And that's the key in Australia. Everybody's enjoying themselves. Hence why 5 out of our cities are in the top 16 worldwide because everyone's having a good time. Now they complain a lot, they want more, they're like a bigger house for less money, who wouldn't? But they're doing very, very well overall. So again, above market, above average growth in most places, a lot of pressure in Melbourne, a lot of pressure in Perth in particular. Right, finishing off, what we've got to remember is that this is a crazy time, but don't walk away. Don't worry yourself too much. So the key is to remember that, hey, get resilient because we've got at least 3 more years of Donald in the White House. 3 more years at least. They've already talked that he might become the next vice president, to go another 4. But just get used to it because he ain't going anywhere. So you better stop wishing he would and start just looking after yourself. Don't worry about it. And sometime, theoretically, reality should kick in. Someone should say, hey, Donald, you're not allowed to do that. This is the Constitution. Now, people say, oh, yeah, it'll happen in the next midterms. That's still a year away. That's a long time in politics. We haven't even had Donald for a year yet. He only came in January, and it's like, oh, my goodness, look what's going on. So just get used to it. He's going to be there for a while. So think of it like another episode of The Apprentice every week. You never know what's going to happen, but don't you get fired. And the more artificial things become, because they don't seem real, they seem strange, then the more real you have to be. That's the secret. Do not get lured into that fantasy. Do not get lured into that falsehood. Stay implanted in reality for your own sake, your own sanity, your own benefit. Buy companies that have real operations and real profits. Buy properties that are in good location that someone would want to live in. The more real you have, the better off you're going to be. And you have to take personal responsibility for yourself. Why? Because governments aren't looking after you anymore. Businesses aren't looking after you anymore. You're seen as a cash cow, as a profit machine, not as a valued customer everywhere else, except for SMATS. We're obsessed with customers. I don't know what's wrong with the rest of the world. You even look at I always get my goat up that comes like Optus and Telstra say, hey, we're offering a new plan, heavily discounted this week, only for new customers. All my existing customers, no, you get nothing. You get nothing. Just keep paying your old rate. That's terrible to me. If I was going to offer something, I offer my existing customers better than my new customers because I wouldn't have a business if it wasn't for my existing customers. But that's not how the world works at the moment. So you have to take personal responsibility. Make sure whoever you're dealing with is got your best interests at heart. And stick with fundamentals. I often say people lie, numbers don't. Look at the statistics. Look at the company valuations. Look at the property report. Whatever it is you're doing, go to fundamentals. Is the area you're thinking about investing got population growth, affluent population growth? Does the price seem similar or consistent with others in the area? Can you see it being worth more in the future? These are the fundamentals you have to look at. PE on shares, dividend on shares. I'm even more and more obsessed with dividend stocks the crazier the world gets because at least my dividends pay me a real amount of cash every year regardless what the stock market may be perceiving the value to be. And just be careful not to be dragged onto the middle of the highway where the bus lane is. And that's what's happening now. I think we're being pushed in harm's way so others can de-risk. Whenever you see them buying stuff, recommending you to buy stuff, often they think, oh, well, it's overvalued now, sell it to the suckers. Okay? You've got to be careful that you're not buying a story, you're buying a fundamental. Because if you don't, you're getting dragged into danger. Maybe you get profitable, such as the Bitcoin. But by golly, you better be able to cope with the danger that you're taking on because the danger may become extremely real. And I made my name myself in Asia doing commercials that were giving information away and saying, hey, that's good Australian common sense. Never before has common sense been more important. Right now, you need as much of it as you can muster. If you don't know what common sense is, go read a book on it. It's pretty easy to find. It's like, hey, is that an electric socket? Will I get electrocuted? Probably yes. Don't stick a knife into it. So get your common sense because you need it right now as a protection tool. And glad to know that's me all finished. Now the world is going to get crazier. Last year you might recall the seminar was called Living Beyond the Point of No Return. This year, pinch me, I'm dreaming. It's not getting easier, it's not getting better, but it's getting more opportunistic if you protect yourself, if you don't react to the noise. So stay good, stay sensible, and have a good investment year. I hope you enjoyed this update this year. We look forward to helping you and getting you to come back and return. If you need anything, of course, tax, finance, property, give us a call at SMATS. We look forward to being of service. Thank you very much.